Melissa, this was a very modest beige book. The Federal Reserve finding that the economy is expanding at a modest pace. That is the same language that the Fed used in the previous beige book. Employment growth, that was also modest. Wage growth, modest to moderate, and price increases were modest. Now, the Beige Book also showed that though there was continued uncertainty over the trade war, the majority of businesses were still optimistic about the near-term outlook. There were a lot of very interesting anecdotes about how businesses are adjusting to the trade war. There was a major retail chain in New York that had raised prices on furniture, but then was thinking about reversing them because consumers simply weren't buying it. In Boston, businesses talked about a delay in getting products from places other than China because foreign ports simply could not handle the excess capacity. Now, overall, the Fed rated manufacturing activity as slightly down across the country. About half of the 12 Federal Reserve districts reported a slowdown in manufacturing. Rather than lay off workers, companies in Cleveland were opting to reduce overtime and cut shifts. In St. Louis, companies were reporting declines in production, new orders, and capacity utilization for the first time since 2016. But guys, there were still several districts, such as Philadelphia and Minneapolis, that were reporting strengthening in manufacturing activity. So there was still somewhat of a mixed picture across the country. Back to you.